Hi, my name is Donya and I'm an accountant and one of the owners of International Accounting and Tax Consultants. As a business owner and investor myself, dealing with accounting and taxes is just an everyday part of my business. With a decade of experience in accounting and taxes, I'll be sharing some of my accounting and tax strategy. So as everyone knows, the nation is currently undergoing an economic disruption due to the coronavirus COVID-19 outbreak. So the CARES Act was signed into law March 27, 2020 to provide over $307 billion in funding for the American small business and employees. Now, out of this came multiple funding opportunities for small businesses through the SBA, with Small Business Administration, and as well as some new tax deductions that I won't go over in this video. But in this video, I just want to focus on the Paycheck Protection Program. The Paycheck Protection Program is a loan designed to motivate small businesses to keep their workers on a payroll. Any small businesses with less than 500 employees is eligible. That's including nonprofit, independent contractors, veteran-owned organizations. As long as you've been affected by the coronavirus, COVID-19, this program right now is going to help you. So as of today, the independent contractor portion is still in discussion, and it seems like it's going to be a program on its own. But businesses and industries that even have more than 500 employees are able to qualify for this if they meet the SBA size standards for their industry. And this is not limited to hospitality, food. This is any business that has been affected by the COVID-19. So the SBA will forgive these loans if all employees are kept on a payroll for 8 weeks and the money is used for your payroll, rent, mortgage interest, or utilities. Now, out of those few expenses, 75% of those business expenses has to be for your payroll, which makes sense if you want to get small business to keep people employed and on a payroll. Now, the loan forgiveness is based on maintaining or quickly rehiring those employees you laid off or fired. So when rehired, you cannot reduce their pay or salary, and you need to maintain their current salary levels. Forgiveness amounts will be reduced if the full-time head count declines or if the salary and wages decrease. It can turn to a loan that's about 2 years and an interest rate of 1%. And currently, there's already 10 million people who apply for unemployment insurance so far. So this program should be able to help some of those individuals get rehired and not have to file unemployment claims. If your business fired any employees after February 15th, this can be used to get those people rehired quickly and back on your payroll. And if you are an employee that was laid off, be sure to inform your employer about this program as well. You do need to apply at an existing SBA 7A lender or through any FDIC insured bank or credit union. Other regulated lenders will probably be available in the future, but they have to be approved and enrolled in this program. Based on the current demand, though, most major banks are already having issues keeping up. The application just opened up on April the 3rd, which is yesterday, and some banks are still not prepared. So first check with the largest bank you currently have an account with. That'll make this process a lot easier. There are also limited funds, so if you are a small business, you should be moving quickly as you can to take advantage of this. Don't wait until large companies start taking advantage, because payroll is one of the largest expenses for a lot of these businesses. So let's take a quick look at the PP application. So this application is just to let you know the information needed to apply at your financial institution. Your business information is always needed. So that's the EIN name, EIN number, your name. You should be able to get a payroll report from your payroll software or the accountant. And one interesting thing is the economic injury disaster loan advance, which was discussed in the previous video, is also used in this calculation. They want to know about the already received funds from that program as well. So the average monthly payroll is going to also be limited to $100,000 for each employee wages that's over $100K. So just exclude any additional wage amounts that exceeds that amount. Be sure to include the employer portion of state and local taxes paid through payroll and benefits like your 401K and health insurance as well. So I've seen a few videos already including 1099s in the calculation, but that's not correct. Independent contractors are not included in payroll. They are considered businesses on their own, so they should be able to apply on their own at a future date. and that's the things they're still working on. This also goes into the issue that this happens every time a new tax law or change happens. People make laws that don't fully understand what they are doing, and it's left a lot of people trying to figure these things out. So don't expect a smooth process. I know a lot of accountants and bankers involved still don't have all the answers, and they're trying to figure this out as they go. So if you know any additional information that's not being shared right now, feel free to put it in the comments section along with any questions you have. So I hope this information has been very helpful to you. If you would like to see more videos, please comment and subscribe.